Good afternoon, everyone, and welcome to this new edition of Token City's weekly program. I am Juan Pedro Parás, Business Development Manager at Token City. Today, we are joined by Andrew Bull from Bull Blockchain Law to tell us all about the regulatory landscape of security tokens in the United States of America, the upcoming changes and opportunities at hand with the new administration, and the very recent executive order that Trump signed just today on digital assets. After finding Bitcoin in 2011, Andrew ran one of the first cryptocurrency mining companies in the US. Since writing a thesis on Bitcoin in 2013, he has written several publications for legal journals, been quoted in Forbes on digital assets, spoken at international blockchain conferences, contributed to a European Union publication on US blockchain legislation, and developed some of the first blockchain-focused courses for law schools and graduate programs. In 2020, he was one of the American Bar Association's top 40 Lawyer Award nominees and is currently an adjunct professor of law at Drexel University's Thomas R. Klein's School of Law, teaching blockchain and cryptocurrency law. Today, Bull Blockchain Law LLP, the firm that Andrew founded, is one of the largest solely blockchain-focused law firms in the US, representing clients in domestic and international jurisdictions. We also have here today with us Javier de Coca Benjumea, Token City's head of global ecosystems, to provide an EU perspective. With 17 years of experience in the financial technology sector, Javier has spent a large portion of his career helping develop and connect digital finance solutions in frontier markets, now focused on EU primary and secondary DLT issuances and trading. Thank you very much, Andrew and Javier, for joining us today. Welcome to the program.
Thank you.
Thank you very much.
Andrew, it is very timely that you join us today because, as I mentioned earlier, Donald Trump just signed a new executive order regarding digital assets in the US. Could you describe for our audience what the executive order implications could be?
Absolutely. So the last 2 months for sure have been a whirlwind in the United States from a regulatory perspective, because traditionally it's been our take that the government, especially the governing bodies, regulatory agencies like the SEC, have not provided enough information and or clarity related to the industry, definitely from a regulatory perspective. And so that's driven a lot of businesses to operate in other jurisdictions. And so this executive order is extremely timely, very needed, because what it really calls for is clarity at the very base of its purpose. And so it's going to rely on Congress and the governing agencies, such as the SEC and CFTC here in the States, to provide actual clarity to companies and individuals that are operating in the industry. So from a legal perspective, we're really excited about what's going to be forthcoming, specifically in the next 180 days here in the States, because what it's going to do is provide some answers to some of the unanswered questions that we, as practitioners in the industry, as well as a lot of the businesses that have operated in the industry, have had for years. So we're really looking forward to that clarity, and hopefully it will be very productive and have an eye for helping and assisting a lot of the businesses that operate in the United States, and then also a lot of foreign businesses that want to come and operate in the United States, not just from a tokenization perspective, but also from a technology perspective.
Yeah, it's a very, very interesting new executive order, and it's very exciting to see how this is going to help develop the industry and the regulatory framework in the US for sure. One of the aspects that this regulation brings as well is the prohibition of CBDCs. Could you go a little bit in depth as to what this implies?
Absolutely. So centralized digital currencies, especially in the stablecoin context, have given birth to a potential for private companies, right, like Circle with USDC, to be able to issue this type of asset. And the biggest concern was that a government that issued their own digital version of, say, their national currency in the form of a quote-unquote stablecoin would then be able to track the information related to not only the circulating supply, the use case of it, the usage of it by its users, et cetera, kind of the antithesis of why blockchain was created in the first place, to create transparency and to create some security for the individual users who are actually using the technology. And so what's really great about the executive order is that it prevents a centralized entity such as the federal government from issuing this type of asset, because the reality is that there's a lot of theoretical concerns around the dystopian world that we would live in, whereby a centralized digital currency that's operated by the federal government potentially is allowed to spy on individuals and or companies that are operating in their businesses. So what this does is it really puts the onus on individual private companies to be able to go out and issue this type of asset. And that's really productive from a regulatory clarity perspective, one. But two, it's also going to spark a lot of innovation in the industry. You know, there's always been this disconnect, which is closing over the last couple of years between the traditional financial industries, not only in the United States, but globally, and, you know, Web3, emerging tech, blockchain, distributed ledger technology. And this really stands to provide some type of bridge between the two. And so we're going to see a lot of more traditional financial companies, and already are seeing traditional financial companies coming into the industry and offering their types of services. And so I think that there's going to be a massive push, not just from a transactional perspective in regards to the actual assets themselves, but also new issuances on top of that, of some very legitimate projects that are going to issue these types of tokens.
Yeah, that is super interesting, and I would also like to ask you, like, what would the role be of commercial bank money, for example, that could play in this context?
Without a doubt, you know, previously up until now, you know, I've always kind of talked about this general sentiment that the majority of people who use financial services in the world will and or are already being disrupted by blockchain technology, and they won't really fully understand what that disruption or benefit is at this stage. And so, especially when it comes to the banking sector and the potential funds that they have, the processing of transactions on a global scale is going to increase exponentially. I mean, one of the major points around blockchain technology and the assets obviously that are created on it are that they are truly borderless in their ability to transact in a timely fashion, but also at a very low cost. So if you can imagine that kind of expansive nature of how much of funds are consistently moved between not only national banks, but also international banks, both from a regulatory standpoint and from a practical kind of business standpoint, you know, it's going to solve a lot of the painstaking issues that we see in this industry in terms of banking operations for businesses to be able to go out and expand into other jurisdictions. And again, we're just going to see a massive amount of monetary savings too for these businesses and or banks that facilitate these transactions on a global scale. So we're really excited from that perspective in terms of regulatory clarity, because what it's really going to open the door for is not just necessarily the already kind of exponential expansion that's happening on the Web3 side of this industry, but it's really going to bring a lot of those benefits that we see, especially in the DeFi space, to the centralized finance industry.
I agree. It is a very exciting time to be tracking all of these changes. And to get a more complete picture, how will security tokens issuances, for example, fit into this picture as well?
Yeah, for sure. So, you know, we have always kind of taken the approach here in the United States that a mirror image of how traditional securities are issued is the best approach to issuing a security token. And what's really important is figuring out what is that security token actually representing. Is it representing equity in a company? Is it representing debt? Is it representing some type of future profitability? Similar to obviously how stocks operate. And then obviously, which I'll talk about in a second, is the potential benefit of tokenized actual securities, actually the securities that have already existed in the non-crypto blockchain space. But from a security token issuance perspective, we're seeing a massive push in the industry in terms of representation of real world assets. And so a lot of times the way that we would approach it would be this very traditional, okay, we're going to mirror this as if you were just issuing a traditional security. Well, from a congressional clarity perspective, especially coming off the tails of this executive order, but then also just more clarity that we're going to anticipate getting over the next 6 months to a year, is that we're really hoping that they're going to carve out an ability to be able to issue different types of security tokens that aren't necessarily constrained to the same constraints that exist in the traditional equity issuance space. So we're already seeing an uptick in these types of projects from a security token issuance perspective, especially from the perspective of traditional projects that have nothing to do with blockchain. They're now coming in and utilizing the technology to expand their user base or their investor base from a security token perspective. So we're very much looking forward to that potential carve out and or some additional clarity, because up until this point, reiterating this larger concept of how regulation is addressed in the United States, with Gary Gensler at the helm of the SEC, it was very adversarial, and a lot of it was reactive in the way that they would approach the industry. And so they wouldn't provide much clarity, and as a result, there would be a lot of businesses that wouldn't necessarily know the best way to operate and potentially issue a security token, for example. Well, with clarity comes expansion in the form of more businesses getting in the industry. So I think that we're going to see a massive push, especially over the next year or two, in the private equity space from a security token issuance. But then we're going to also move into already established stocks and other types of equities that exist in the context of securities that are then going to be tokenized. And so it's really exciting times for that, for sure.
Yeah, totally agree. We're going to be tracking these very, very closely. I would also like to add, for additional contrast, Javier is joining us tonight as well. Can you tell us about the current state of EU regulations regarding all of these topics that we are touching on?
Yeah. Hi, Andrew. And I wanted to touch on one thing that you mentioned regarding Juan's question about CBDCs. It is true that the dystopian scenario, it is actually being discussed here in the EU. Fortunately, we have a very investor and consumer protection focused administration, but absolutely agree that the danger is there. To answer Juan's question about the overall framework that we have here, the EU Commission put in place something that is called the Digital Finance Package, which aims at modernizing the European Union's financial system. This has several bodies of regulation. There's digital payments regulation. There's something called DORA, which is the regulation that focuses on avoiding cyber attacks and other operational risks. Then there's MICA, which regulates stable coins, bringing, like Andrew was mentioning, very welcome clarity on how to proceed with that, and also regulating what used to be called ICOs. And then there's the pilot regime that focuses on security token issuances. And what this does is create a set of exemptions from the financial system regulation that's in place here, called MiFID, MiFIR, and MiFID II. And these allow for the creation of 3 different types of infrastructure: multilateral trading facilities, which are focused on trading, settlement systems, which provide the settlement leg, and then there's the trading and settlement systems, which is basically the most complete package, which includes custody and so on, which, by the way, is what we are launching this year at Token City. And the types of to avoid risks, there's limits to the volume of assets that can be issued and the types of assets that can be issued. In particular, it can be shares, UCITS funds, or bonds. And there's a new entity creation that's been created here in Spain, basically a combination of the traditional finance CSD and what in the US is called a transfer agent. It combines both, let's say, roles into one. It also brings decentralization in kind of a regulatory way, because there can be many different types of this entity, as many as the market can take. And basically, what it does is ensure that the issuer actually can issue, the assets can actually be issued in a compliant way, and basically also is in charge of managing what is of change that currently, at least, cannot be managed. For example, let's say a token has to be seized because of a legal procedure that is not directly related to the issuance, or maybe a token has to be inherited, right? That's not directly linked to the issuance. This entity will take care of that. And that's why we in Token City are also providing the technology for these type of entities to operate. So we are very excited, Andrew, to see the dynamism that is for sure coming your way, and also celebrate the fact that hopefully we can go Europe and the United States hand in hand in pushing forward with this technology.
Yeah, I really couldn't agree with that more. And you, practicing in the States and having a law firm here, I've always been envious of the approach that you guys have taken over in the EU. So getting some clarity and some potential also mirror image regulation in that context, I think that'll be really beneficial for all of us.
Sure. I would like to jump in exactly at that point of dynamism. I think we can agree that there's a trade-off between security and dynamism in regulation. In the EU, we have excellent protections, for example, and in the US, there seems to be a broader focus on dynamism and innovation if we look at regulation historically. Andrew, how do you think regulators can balance this trade-off?
Yeah, I think it's solving the educational hurdle first and foremost. You know, having this newer technology that is very borderless really creates concern amongst regulators, especially at the state level here in the United States. So one is making sure that they're properly educated. That comes in the form of a lot of times lobbying in DC, but it can be very beneficial in having them understand what the actual potential use cases are, like the ones that we've been talking here and are constantly talked about in the industry. So I think that it's really a balance because, especially in the context of consumer protection in the United States, we, from a regulation perspective, take the approach that the more money you have, the more protection you probably need. And as a result, I think that there's, outside of maybe California, for example, there's not nearly as much of an emphasis on the consumer protection side for the individual, just kind of the everyday individual. And so having some congressional clarity coming out of DC and then that trickling down to the state level, I think is potentially beneficial in that those regulators will be able to not only kind of take some of that in stock in terms of how they're going to issue their own state level regulations, but it will also have more of a focus on ensuring that people are protected, because the amount of obviously scams that exist in this space is astronomically high. And especially when you have a large populace that doesn't have a high level of sophistication in terms of how the technology operates, and therefore they're reliant on third parties who are providing services, whereby those third parties are also potentially vulnerable, you know, in the wallet context, the exchange context, in the way that people are holding their assets. All of those things become very, very important from a regulatory perspective. And so we're still so early on that a lot of the state regulation hasn't even come close to addressing some of those consumer protection issues. And so we're really hoping that this at least kickstarts that, because it's very much needed. And, you know, what I always say to state regulators when I have conversations with them on behalf of clients is really truly understanding that the user adoption side of this space is astronomically increasing at a rate that hasn't been seen in many, many years from a technology perspective. And that just means that every single day, more and more people are getting involved in the industry from a consumer perspective. And so we really need to take the approach that all of these people's individual data, their privacy information, the way that they hold their finances, that all needs to be protected. And maybe changing a little bit of that regulatory framework is going to be needed there, and taking a kind of a cap out of the page of the book that is in the EU.
Yeah, thank you for that, Andrew. And touching on the subject of retail investors, how do you see retail investors are going to start increasingly getting involved in these type of issuances?
I mean, talk about a timely subject matter, with the kind of meme coins being the talk of the town right now, and especially what's happened over the last week or two. But there's a major need from a consumer protection perspective for retail investors. And, you know, the rulings that we've gotten from the SEC, for example, have had that as a potential motivation in protecting retail consumers, but the outcomes haven't really provided much in the way of standards and practices, especially in token issuances and how they're actually distributed to the general populace. Because this age-old kind of debate over whether a token has enough utility to not be a security in the United States, that doesn't negate the fact that there are thousands and thousands and thousands of tokens that now exist in the industry and will continue to exist and be issued and be accessible on all major cryptocurrency exchanges and so on and so forth. And so the decision-making behind a user acquiring something like a meme coin that was just released in the last couple of weeks is a very serious question that I don't think that we are quite competent enough from a regulatory standpoint in the United States to really properly protect retail investors, yet their access to these potential investment opportunities is increasing at an alarming rate. And so there really needs to be something in the way of stepping in, because again, the traditional securities laws, those protect those investors that are coming in and maybe investing in like a startup or some type of potential larger company opportunity. But a lot of times there's very strict restrictions on who can invest in those. So when you have these types of assets that expand to the general populace and now are accessible by virtually anybody from an investment standpoint, there really needs to be an overemphasis on education in the context of regulation and making sure that we're not reactive, because in the States, we really like to be reactive from a regulatory standpoint. We wait until see things how they flesh out, and then we kind of deal with it from that perspective, especially from an enforcement perspective at the federal level with governmental agencies. So we really need to take the approach that we need to be more proactive.
Yeah, expanding on that subject about what we're going to see and what we would like to see, Andrew, what changes and regulatory trends, let's say, or approaches would you like to see in the future regarding this subject?
Yeah, for sure. I'll revert back to a proposal that one of the heads of the SEC provided, Hester Peirce, in the form of allowing projects in the industry to submit information to regulators and know that they're not going to be potentially strung or used as an example in the industry, and work with the regulator to be able to get their information up to par to the extent that there's no lying, there's no violation of anti-fraud provisions, there's no issues in terms of that information, right? You see the slew of white papers that have come out over the last 6 or 7 years, and there hasn't really been any oversight in relation to how that information is actually initially drafted and then distributed to the general public. So what I would like to see, both in the security token context and non-security token context, is an ability, or at least a willingness, for regulators like the SEC to work with those who are considering token issuances. And the way that they do that is they offer some type of department like the Financial Innovation Hub, where individuals or entities can go to them, submit all of their information related to their project, know that they're not just going to come under fire immediately, and then have constructive feedback from the regulators that's going to direct them to a place where they don't find themselves in an administrative proceeding or in court against the SEC. Because I think that's the other benefit as well in all of this, is that if we see real world clarity where these governmental agencies, and like just taking a page out of the EU, thinking about having to submit a white paper that is compliant under certain terms, that's such a great idea and really should be implemented, because the amount of token issuances in the United States has really been pushed offshore, obviously, in the last 6 or 7 years since 2017. And we're about to see a major influx in the opposite direction based on what's happening right now. So more now than ever, the SEC really needs to open their doors and say, hey, come to us, bring us your information, let us help you to make sure you're compliant.
Yeah, I think it's going to be very interesting to see how this aspect evolves. I would like to go back to one of the aspects that you were touching on earlier, and it's how a business can determine whether their token would be a security token or a utility under US law.
Absolutely. So there's a famous test called the Howey test for determining whether an asset is a security in the United States. And it's a pretty in-depth analysis and has been developed over many, many years since the Supreme Court determined that this was the test that needed to be applied. And what I always say to projects, and also as a side disclaimer, this is not formal legal advice for anyone who's listening, but what I always advocate for with clients is making sure that you understand not only the true purpose of the asset and the token and what it's actually intended to do, but also how it's going to get into the hands of those who are going to use it. Because those are both very, very important, not only in the context of whether a token is categorized as security, but also from a jurisdictional standpoint, what potential regulations are you as an issuer triggering by allowing your token to be accessible in multiple jurisdictions. So here in the States, we take the Howey test and we apply it. And ultimately, if you have an individual who is just simply putting their money into a token and then they just sit back and they just wait for a company to go out and take those funds and invest it in something else, else and then reap the benefits and distribute it back to an individual. That's very much in the securities realm. And, without necessarily getting into the 4-prong test of the Howey test and boring everybody, the general sentiment is that there needs to be some activity affiliated with the token that isn't just purely passive income driven, because that's security token world, right? We have carve outs for that from an exemption perspective. We want more clarity for sure in that context, but that at least has some clarity in that context, because there's no true definition from a legal perspective in terms of quote unquote how much utility a token needs to not be a security. So it really comes down to an individual project considering what is the purpose of their token, why is somebody going to get it, how are they going to get it. And I always point to, the Ripple ruling that we luckily had here in the United States that gave this potential carve out an opportunity for users to access tokens on exchanges that they're not necessarily purchasing tokens directly from an issuer. A lot of times that's going to diminish a substantial amount of risk in relation to whether that token is in of itself categorized as a security. And there's also a whole process for getting listed on exchanges now, right? From not only an AML KYC perspective, but also a verification perspective, whether their token is likely a security. So I think that that's really the approach that has been taken in the industry and is beneficial and can be navigated, but it's obviously more important now than ever.
Thank you for that, Andrew. I would like to take the last few minutes of the program that we have to touch on a subject that, for example, here in Token City, we often work with clients outside of the EU that want to enter the EU regulatory umbrella. And we help them with the process, both from the technological perspective, but there's also other implications they have to take into account. So we have also worked with companies looking to enter the US market as well. So for companies interested in entering the US market for these types of issuances, what factors do they need to consider, for example?
Yeah, absolutely. So what stage they're at in terms of their asset issuance. So has it already been created, for example, is a really big factor. Has there been a token generation event, a TGE? Because that's going to be really important in the context of not only exchange listing in the United States, but also getting it in the hands of consumers. Because it's a different analysis if the token hasn't existed yet. Because if there's a promise for something in the future, then that's going to push an asset more towards a securities designation than not. And so if a token doesn't exist, and we went through this with Telegram here in the States with their token that never actually got off the ground because of the issues that they ran into, is that they were basically promising to build something out. And so from a utility perspective and or a tech provider perspective, whatever the underlying kind of purpose is for the token, for projects that are international, considering the US, think about the utility behind it. Think about the core functionality. Does the technology actually exist? How advanced is that technology in terms of its development? Those are really important factors, because if they do exist and on day one, once you're on Coinbase, for example, somebody can acquire that token and then potentially go use it on your platform, that's going to be massive in terms of determining your overall risk profile and really diminishing your risk in relation to securities issues that exist in the States. So I always kind of pinpoint that, hey, when you're considering coming to the United States, think about where you are in your development. And that's not to say that projects that haven't necessarily issued their token can't come to the United States. Obviously, that happens consistently, and there's a lot of projects that do. It's more of just evaluating it from that perspective and thinking about, okay, are we ready to get to that point to be able to diminish that risk in relation to a securities designation? And also, again, just highlighting what is the ultimate purpose of that token, because there's a very different purpose for a token that exists, say, on like a decentralized protocol that the users are really dictating and controlling. Conversely, a issuer owning 80% of the supply of the token and really holding on to the potential control over the actual price fluctuations. And I'll just leave this with this last point, is that if you're evaluating your project from an issuer perspective, say I'm thinking about it from a company lens, and you're determining that you are truly in control of the potential price changes in the future for that token, then you need to reconsider what your potential risk mitigation strategies are, because the whole way to diminish risk over time is to offset that control. And how do you do that? Well, you do that with your technology. You do that with listing it on third-party exchanges. You do that with making sure that there's core functionality in relation to the token before it gets in the hands of the users and the general population. Those are all major important factors for sure.
That's a great way to put it. Thank you for that, Andrew. Javier, would you like to add something else to that?
Yeah, I fully agree with what Andrew just described. There's a lot of actual scamming going on, especially in the internet. There's a lot of that. Now in the EU, we do have protections. To mention Token City in particular, we will be able to provide issuances in the primary and secondary manner, and we will be also able to transform existing securities, whether in paper form or book entry form, into DLT format, so to speak. So, and all of that with great focus on market integrity, investor protection, and so on, which is what characterizes the EU regulation at almost all levels. And also, just to finish, I just really wanted to congratulate Andrew because it's just such a fantastic, exciting time in the EU and the US right now for everyone in the industry, in the blockchain world as a whole. So we really do hope, you said that you were looking at us, and I am pretty sure that now in the EU we will be looking at you with a great dynamism that is for sure coming on. So congrats on that.
Yeah, congrats as well. Well, that's our time for tonight. Thank you, Andrew, Javier, and to our audience for joining us. Tune in every Friday at 7 PM CET, and good night.
Thank you. Have a good one.